Hey guys, how's it going? This is Taylor Goldenthal and
Nikki Koteras here with the Bridge Group.
And we're checking in today to bring you all September's market update.
So actually we have fell 17% year over year and now for the 6th consecutive month. So we definitely are going back to pre-pandemic levels for the market.
Yeah, that's really interesting. Despite seeing that low drop off year over year for single family home sales, the luxury market, which is $500,000 to $1 million, actually blew up over the last month of September, up over 12.5%. Right. Which I think is pretty interesting. You know, in times of inflation, like which we're in right now, real estate is generally seen as the best hedge against inflation. And we're seeing these people that are in this luxury price point, rather than parking their money in the stock market or anything else, despite these high interest rates, they're putting them in real estate, which I think is really interesting and something to generate some thought.
Yeah, especially with interest rates, almost at 7% now, and that affordability, but still having that luxury market who is still climbing as well. So it definitely is very interesting numbers. So with the market normalizing, going back to the pre-pandemic, it actually days on market grew from, I think it was 29 days to now 37 days on the market. So
that's pretty wild. And we also saw total property sales, so including all other elements, not just single family homes, down about 17%, 9,300 units sold, just under 9,400 actually.
Oh, wow. And the median price actually rose 14.7 to an average of 343,000 as well.
So our inventory rose 2.7 to 2.7 months supply of inventory, which is up from 1.7 from last September. And it's the highest level of inventory that we've seen since July 2020, which is pretty crazy. Really, in summary, I guess, despite lowered sales volume overall, we're still seeing increases year over year for average and median sales prices. We're still seeing the luxury market dominate as well, despite high interest rates and in these times of inflation, which is pretty interesting. And just to take a look at it a little bit deeper, you know, we're talking about what is a normal housing market, and pre-pandemic housing markets, it was 50, 60 days on market, typically average. We're looking at 37 right now. So we're still in a very strong market, it seems, just not quite the crazy pace that we had throughout all of really 2021, parts of 2020, and the beginning of this year as well.
I mean, it's definitely normalizing, and I don't think that we're going to see the crash that everybody keeps talking about.
So yeah, really in summary, I mean, despite seeing these lowered overall sales volume numbers, we're still seeing rising prices, rising property values as a whole. And we're looking at it year over year, and then the luxury segment I think is particularly interesting. Just to take a look at it a bit further, you know, typically like the pre-pandemic housing market, average days on market 50 to 60 days. We're looking at 37 right now. So it's still a very strong and healthy market. While no one has a crystal ball as to what's happening, what we do know right now from the data in front of us is these values are holding strong. We're still generating multiple offers in a lot of these listings that we're having. And yeah, people are still buying houses. So if y'all have any questions about anything buying, selling, investing, give us a shout here at the Bridge Group. We'd love to be a resource for you.
I'm happy to help. Thanks.